good evening, everyone, and welcome to our webinar tonight. I will start just with some of the basic notes here that I'd like to introduce this webinar tonight. So this webinar is part of Zuhlke's innovation series of webinars, and you can actually stay tuned on our LinkedIn page if you like to be updated on the upcoming webinars. Tonight we have about over 50 people that have registered to these to the webinar, and we will be discussing fostering partnership in the open banking ecosystem. So before we start, firstly, I'd like to thank the sponsor of tonight's webinar, who is Zuhlke Engineering. And I like to also to remind that this is part of a community event of StartmeupHK Hong Kong Summit, which is actually going on this week in Hong Kong. So the other thing I like to mention is some of the housekeeping rules. So if you like to participate to this to the panel by asking questions, you can use Pigeonhole. I think Lorraine is going to, yes, thank you, Lorraine. This is the QR code, or you can just go to the website pigeonhole.at and enter the code HIZUHLKE to ask questions. We have also the Zoom chat, but we prefer please use the Pigeonhole so that we will be able to actually see the ratings. You can vote the questions, and we will be, as if we have enough time, we will be able to look at the questions in the Q&A on Zoom. So that will become as a second priority, just to let you know. So if you won't be able to answer the question, we'll do our best to do that offline as a follow-up email after this webinar. So we'll be also running a poll during this webinar, so be ready. I think Lorraine at some point will probably will pull up a slide where you will be able to will show you the poll, and we'll be discussing the results with the panelists. So tonight let's go to the panelists. Right, tonight we have a great lineup of panel, with a particular focus on fintechs and in open banking. And they go from start from Hong Kong, which with eventually a global. Some of them would have global coverage. And before I go there, I'd like to introduce myself. So my name is Antonio Tinto, and I'm business developer at Zuhlke Engineering in Hong Kong. So I'll be moderating the panel tonight. So my experience goes from digital position to digital transformation projects, and I've been in this region for over 15 years. My closest experience with open banking has been with the Fintech Association of Hong Kong. Actually, I've been lucky enough to be in some of the discussions with the regulators in the past, and also in some projects doing delivery but what was more platform banking. Very exciting, very interesting, very early stage. So let's now start from to move to the panelists here. So let's start from Hong Kong. So tonight with us we have Ankit Suri. So Ankit is the CEO and the founder of Planto. Hi Ankit.
Hi Antonio, it's good to be here.
Yeah, great to have you tonight. Ankit, can you please spend a minute to just introduce yourself and what's your experience in open banking?
Sure. Well, thank you everybody first for taking out time to attend this webinar. My name is Ankit. I'm based out of Hong Kong. So I'm the CEO and co-founder of Planto, and Planto actually started out as not really an open banking sort of provider to the market. We started out as a personal finance ecosystem that really wanted to leverage data to help consumers make great financial decisions. We are focused on really figuring out how do we get people to manage money, how do we get people to, sort of optimize their finances. And coming from the background that I've had with sort of retail banking and personal finance myself, it was something that as a team we were pretty passionate about solving. As we spent the last sort of couple of years trying to solve this problem, we developed certain technologies that we soon realized were actually would result in use cases for different aspects, for open banking. And that's really where something that we've been conceptualizing and exploring in the last 3 to 4 months.
Thanks, Kate. So let's now move to our next one, the one that is connecting the banks with the fintechs. And I will start from Mary tonight. We have Mary Steinheiler. Mary is a VP from APAC for TrueLayer. Hi, Mary. Can
Hello.
you please?
Thanks for having me.
Hi, can you please introduce yourself quickly? Thank you.
Absolutely. My name is Rory. I work for a company called TrueLayer, who are a UK headquartered, increasingly global API platform. TrueLayer is an API infrastructure platform that allows our clients to connect to financial infrastructure, including to fetch data, as well as to initiate payments, originally in the UK and now expanding across the globe. So I look after the APAC region and look forward to the conversation tonight.
Thank you. So as I was saying before, let's move to the other side of the globe, to the old continent. We have connected with us from UK, another third-party service provider, and we have Jason O'Shaughnessy. Did I pronounce your surname correctly? Jason, I hope so.
Thanks, Antonio. Yes, you did a very good job of pronouncing my name correctly. It's such a bad name that my wife decided not to take it when we got married. So yeah, thank you very much. SaltEdge is, so I'm the SVP of sales for SaltEdge, responsible for sales globally. We've been around since 2012, and we kind of an amalgamation of both companies that you've just heard from today. So we started off as a PFM provider back in 2012, and the problem we had was our users very quickly wanted to get access to their data in an automated way rather than having to manually upload that data. We looked for providers. We couldn't really find providers that would service us in the way that we wanted. So our CEO decided to build his own platform to consume data via APIs and web scraping, which we'll go on to in more detail later on. It was very apparent and very quick for us to understand that banks weren't willing to share their data via APIs in 2012. So web scraping became the dominant player and still is today in most markets outside of Europe. When Europe PSD2 came along and all the banks had to open up their data via APIs, that was great for us because we had a platform that could consume data via APIs very quickly, both taking advantage of the payments and the account information. And today we support just over 68 countries around the world, and we see some amazing solutions and requirements in all of these regions.
Thanks a lot, Jason, and for the introduction. I like before we kick off with the panel discussion, I wanted to set a little bit of context for those on the call that they're not familiar with the open banking. So I think maybe Lorraine, we can share next slide. This is a fact that from a research from NDJ, so that 87% of all countries now have some form of API basically activity, and is definitely becoming a global phenomenon. So this just kind of shows the relevance of this topic and how fast is really growing across the globe, right? It's really global phenomenon. So, and that takes me to next slide, which I would like to kind of give the audience a little bit of an overview on what's called open banking, right? So there is as you see, there are two different, let's say, approach in like two different big streams, right? One is a mandate approach where essentially the regulators are pushing, basically are mandating the open banking to the banks, right? And across basically precise timeline. And there are markets where it actually is more market driven. So those ones that are regulated, they are in dark blue on this map that you see, and these are like Europe, and also in Asia Pac, we see the majority of them are market driven or semi-market driven, but the one that is taking a regulatory angle, more similar to the European one, is Australia, and they've actually started the first phase this month. So say that I like to focus more for a moment on Hong Kong and say what are the phases in Hong Kong. So Hong Kong is taking really an approach. The HKMA in Hong Kong, the approach is taking is suggesting really guidelines to the banks to follow. So therefore, it's not mandated, and so what they've done so far, we have gone through a first phase and the first two phases. The first phase was really a read only. So then what does it mean? It means that the companies, that makes the fintechs, will be able to access essentially the bank information, such as pricing of the credit card or loans or other products that the bank is selling. And the other phase, which is related to submitting new applications, like, can be a credit card application or a loan application that could be submitted by a third-party service provider. Third-party service provider, in a nutshell, can be a fintech, or can be another, as a fintech, it depends. It can be either a standalone product, or it can be also a middle layer, or we will cover this more in details later with the panelists. And now we're looking at the deployment of the next two phases, which is phase 3 and phase 4 will be more about the transactions and initiation of payments, right? This is it for Hong Kong. So I think then we could probably start with the first question for the panelists tonight. So given the topic, so we'd like to we have already gathered some of the questions from the audience, quite a few questions, and so we'll kick off with this one, and then we'll go back to Pigeonhole, see what are the best for the questions. We'll pick up from there. So my first question to you guys, and I will probably, let's start from the old continent. Let's start from you, Jason. So how do you think, how important are partnerships for tying up partnership for the fintechs within the ecosystem? Right? How relevant it is for them to be able to grow in the open banking ecosystem?
So, so I suppose partnerships come in many forms, but if you go back about 5 years, there was always this big debate around fintechs would go alone and all the banks were going to die because the fintechs were going to take over the world and they'd now have access to banks' data. We don't need banks anymore. We can just survive as fintech companies. I think the fintechs learned very quickly, along with the banks, that actually both of them need to partner with each other. So, we've worked with a number of fintechs over the years that have launched services and want to be completely independent to banks, and they don't want to work with banks, and they want to build up a marketplace and interact with consumers directly. Mm-hmm. They learn very quickly, the majority of fintech companies, that actually it's very expensive to get users and bring them on board. And so therefore, you end up finding them transitioning over to partnering with banks and doing joint ventures with them so they can target those banks' users directly through the banks. So that ecosystem works very well. And it works very well for the banks also, who actually can't move and pivot quick enough to do innovative solutions. So working with fintech organizations for things that would otherwise take them 2 or 3 years to do works very well. So actually, in this open banking space, you've got that one side of collaboration between the two organizations, but then also accessing their data. Both banks and fintechs benefit from open banking. So fintechs benefit from being able to provide the kinds of services that consumers want. And banks benefit because actually they get wider access to their customers through other services. You know, they're not just limited via bank.com and give you access, you know. And ultimately, the thing that we should never forget through all of this, it's about giving access to the consumer to their own data through viable services. And if banks do that and they do it well, actually as a consumer of that bank, I'm going to do more things with that bank. And probably a classic view is if you go back 5-10 years, the way that banks, if you take the UK marketplace and many places around the world, the way banks would get their users or get their customers is they would target them by having ATMs and banks very close to universities. You know, get them early, get them while they're young. Now, actually, if you're a student, you're going to choose a bank because I can connect to a budget app, or I can connect to a tip sharing app. And if I can't connect my bank through that app, then actually as a student, I probably might not sign up for that bank because I know that Bank B can give me that functionality. So I think the way that people consume their data and work with banks is going to be different.
Yeah, and also see in some one of the questions that sometimes it happen I've been asking in some of the some of the events, you know, like or webinars is like the banks are like, oh, so can we then access the data from the other bank, right? So that can we, how can, so that's not partnership. I see not only vertical, but also horizontal that is happening across the banks themselves, right? So obviously this kind of is an angle where you see larger players might be more beneficial for smaller players than larger players, right? There is always that kind of discussion there, but yeah, it's an interesting point. It sees that how they can be that question obviously for large players is like, okay, so what is going to happen for us, right? How we will be able to not there's always the concern of losing data, right?
But I think just to extend on that, you know, it's just as powerful for the banks. So all banks have online capabilities. You can go to your bank and apply for an account. You can apply for a loan. You can apply for a mortgage. And if you can get real-time access to Jason's bank statement data from his other bank in order to approve those loans in real time, then that's really valuable. It's not just fintech. So the banks benefit by having access to all of the other banks' data that Jason may have relationships with. Yeah.
And also, I think what I could see that like the benefit, because today I see more and more users getting multiple bank accounts, right, and or across different countries. In some of the cases, and this type of collaboration also will help in some of the cases like money laundering or KYC or so on. You know, that will be definitely beneficial. Actually, this is a discussion for another panel the other time. But yeah, great, thanks, Jason. I think I wanted to move to maybe Marie. Will you what's your view on that? Like, are you that are as Jason an integrator of other, you know, platforms, right? You talk also directly with the banks. What's your view on this point?
So I would probably agree with what Jason has said, that I think it's about partnering in a way that lifts up the ecosystem as a whole. One thing that you know, I think is a big stumbling block and actually addresses something that was just mentioned in the chat, is that obviously when you have two organizations coming together who have very different ways of working, very different ways of thinking about risk, different risk tolerances, undoubtedly there will be areas where it's hard to come to an agreement. I think one winner in this new age of partnerships have definitely been providers like ourselves at TrueLayer, where we are essentially an enabler for other businesses to make some of those steps easier and to take on some of that headache and the liability, and provide the level of credibility for the smaller firms on one side, but also an opportunity to get feedback and future-proofed revenue streams for the large institutions and banks on the other side. So absolutely agree that it's crucial to have these partnerships in place. I think ultimately the consumer wins. There are obviously some areas where value streams that are more reminiscent of rent seeking are going to be decreased, but I think the level of value that's going to be created by new propositions and new players in the market will exceed that. So in the end, we all win. So I don't think it's a zero-sum game.
Thanks, Marie. I'd like to move to Ankit now. Ankit, you are really based in Hong Kong, and you see the Hong Kong scene very closely, and you've been spending probably most of, your career in most of it, right? If I'm not wrong. So seeing you across different paths before, and the point that I actually wanted to cover with you, still within this partnership context, what is the challenge that you see really the biggest challenge for as you're a smaller player, newcomers right into the game, is to start collaboration with the banks.
Yeah, so I think, Antonio, where we usually tend to approach sort of anything that's open banking is sort of really thinking about what the customer really benefits, and sort of trying to really approach the discussion with that customer centric point of view. So I think just sort of going back to the point around partnerships, what we've often sort of seen is that as a customer, we're never using a single service really. We're always using multiple services. In fact, the amount of loyalty that we have seen over years, it's something that's been changing. We all have multiple credit cards. We use different services for different needs. And frankly, in markets like Hong Kong, where there's so many sort of banks who are providing services, everybody seems to have different strengths as well. So everybody's sort of focused on solving different problems for different kinds of consumers. So I think where we have sort of approached partnership is to let sort of financial institutions and fintechs recognize their strength and recognize how they can actually benefit by partnering and taking a customer-centric view. Because our thesis is pretty simple. We don't think that the customer would actually leave you for being customer-centric. What we really have to do is find new business models that actually are now a lot more customer-centric. Where we have seen sort of challenges is that it's still early. We are still sort of in as a market. Whether that's conversations around open banking, whether that's sort of piloting use cases. We are pretty early, and what we are really trying to see is sort of get that momentum started, piloting some use cases early on, whether that's through official partnerships or sort of using tools like screen scraping, etc., to start proving the validity of some of our thesis.
So I like you mentioned screen scraping a few times right across since we started this conversation. I think it's been probably, and I think this is for you and Jason as well, that's been in this space for quite some time, and we actually had this discussion a little bit before the panel, interestingly, and it's what is it from a perspective like in open banking, and what does it start, right, for the benefit of people, and where do we see this moving in the future?
I think from our perspective, we think of screen scraping really as think of it as a POC for open banking. You want to show that when there is horizontal sort of partnership, horizontal integration within the financial world, that it actually benefits customers. We can prove use cases. We can create value for the consumers, and then really leveraging open banking to sort of scale that use case. So our view around screen scraping as a company that started off using that to build a B2C proposition was exactly the same, which is the reason why when we have started to sort of conceptualize some B2B services, it's based on the validation that we have seen in our B2C services, which we want to continue sort of executing.
Yeah, because we talk a lot about API, right? But I've seen in many cases still the way to go is still screen scraping in the within the open banking discussion in many cases, right? Jason, what's your view on that? Thanks.
Yeah, similar to Ankit. So we've got so we started off as an aggregator, so a screen scraper where you collect users' credentials securely, access their accounts online and pull the data back and present that through whatever the application may be. The way to go is always going to be open banking and APIs. I mean, it does it for, it builds a relationship with a financial institution. It's a clean connection. There's less likelihood of things going wrong and it's lower maintenance. So it's the right way to go. Unfortunately, we're not anywhere near there yet. I mean, PSD2 across Europe has done a good job of accelerating that. But if you look at where we are today, I mean, there's still demand from fintechs and banks and consumers where they want to access their data through various tools. And in marketplaces where open banking doesn't exist, screen scraping is a great alternative for that, and does a good job of delivering on the requirements of all of those three parts of the equation. And then also, if you look at somewhere like Europe, I mean, even now with open banking APIs, I mean, if you're a budgeting app, you have no access to investment data, to mortgage data, to loan data. And, you know, without screen scraping, unfortunately in Europe, there's a lot of budgeting apps that don't survive because you can't build a successful financial planning or budgeting app just on bank statement data and credit card statement data. You know, you need other data points to make that viable, not just for the service offering, but also for that user to make sense of their money and better manage their money. They need to see a 360-degree view of everything. So hopefully, moving forward, that expands. So in the open banking APIs, as an example, you'll get all those account types, and that's where the market's going, which is great. And in other markets as well, you can start to see that when they create open banking APIs, they're actually doing more than just payment accounts, which is brilliant. So at the moment, I think very similar to Ankit, open banking is the right way to go. We hope everywhere has open banking, but screen scraping is a viable proposition while the banks catch up with that full coverage of all of those institutions.
Yeah, great. Marie, is there anything you wanted to add on that?
Yeah, I mean, I guess just one quick point. I mean, I think the debate, screen scraping versus, it shouldn't be a debate of versus. I think ultimately we're all trying to create a system where everyone wins. Back to that point, I think that's one of the challenges with screen scraping is that right now the financial institutions are cut out of the value chain, and I think as much as regulation is currently driving a lot of the change, I think that realization that they are being cut out if they don't provide APIs will also drive a lot of that change in more market-driven economies. And I think we see that with, I think in some sense, in some markets, the screen scraping debate is almost like a red herring. It's like everyone agrees it should move towards APIs, and the most forward-thinking banks are creating bilateral agreements, and that's how it's happening. So I think, you know, this is depending on how optimistic you are, it's a matter of, anyway, you know, depends on how many years you think it'll take. I think it'll be here for a while yet, but ultimately I think we're all agreed on the direction we want it to go. And then the second thing I would say is to I think Jason's point of the breadth of financial instruments that are covered. I think that's where it does come back to which use cases we're trying to support. And I think there are some use cases that rely much less on the long tail of both product and providers, which I think are often, you know, especially some of in terms of our client base, we're seeing some non-financial large institutions starting to be interested in this data, and they really want to have official APIs. They care about the user experience and the security layer and the kind of above boardness of it. And you know, whether that's right or wrong, I think that's something they care quite a lot about, and they often care more about having those stable connections and the correct connections than they do about the breadth and length of the tail that's covered. And I think that's a first step into the ecosystem for them. And then once they've gotten the taste of that and it's worked for the banks, I think it's about expanding from there. So landing and expanding. And I think that's where, you know, the work that Ankit and those guys are doing is really helpful in Hong Kong to hopefully demonstrate that this is valuable. And, you know, if you don't get in on it as a financial institution, there is a risk that you don't partake in the value creation.
Yeah. Thanks, Mary. Thank you to all of you guys. This is very insightful. And what I'd like to go next, I think Lorraine is showing some of these questions that we start having from the floor. So to please the panel, please the audience. Feel free to add more questions, and also vote the one that you think we should go through first. Hopefully we can go through all of them. So let's start with the first one here, which says, what are some of the most innovative ways, thank you, ways you have seen how the ecosystem is coming together to drive changes? any one of you that wants to take this first?
I mean, I think if we take Europe as a good sounding board for something like this, I mean, I think what one of the differences that we've seen as a business, and I'm sure TrueLayer have probably seen the same, is that, you know, up until open banking, you know, 99% of your customer base was fintech companies. Now that the ecosystem is changing to include open banking APIs, where there's a more real-time connection or a physical connection with the bank. Actually now what you're seeing is there are more banks which now want to do something in this space. So, you know, now banks want to provide services where they can get access to their customer data, because, you know, we touched on this before we started the call, but, you know, when banks look at screen scraping technology, the internal battle that they're always going to have is, how do we convince our customers to use a service that's asking them for their credentials when we spend millions telling them not to share their credentials with a third party? So, you know, it's difficult. And now in the US, they've managed that for the last 20 years. I mean, all the top banks in the US offer services where data is captured via screen scraping, but it's a more mature marketplace. However, in Europe, that's been a really difficult hurdle for banks to crawl over. In Australia, it's nearly impossible. There's, you know, only 2 banks that managed to do it, and their services haven't been hugely successful. However, now with open banking, you know, it takes that grayness away, and banks are willing to turn around and say, great, I want to connect to these APIs to get data to improve the speed of applying for a loan or open up a bank account or a mortgage. So that has been a big game changer with open banking. Banks are becoming customers now rather than just fintech customers.
Thank you. It's Maria, I wanted to move to you. Like, you also have a more like broader view on this. What's your takeaway on this? Okay.
Yeah, so I think that was a good example from Jason. And just trying to think of some other innovative ways of an ecosystem coming together. You know, I think there's some interesting work happening in Europe around open finance. So creating working groups among industry participants, which often are from all walks of business, coming together to think about how we can accelerate it and provide insight to regulators who often, you know, aren't on the ground operators and technologists about how to best approach it. You know, I think that some of the things we're seeing in the UK around the Nesta Open Up Challenge is quite interesting. That's sort of an initiative that's really set up by, I don't know if it's the government, or don't quote me on this, but it's basically a non-commercial entity that has a prize with prize money, and it's all about rewarding innovative uses of open banking in a way that doesn't immediately have to be super commercialized or immediately have to be you know, revenue generating, and just trying to tickle the creativity of people in the industry to go beyond just the usual, you know, PFM, loan assessment, and identity verification. I think those are kind of the low-hanging fruit. Now the question is, what other creative uses will all of you come up with?
Welcome. Yes. So, Ankit, let's move to you then. So, what's your view on this? What are you seeing, and what do you think?
I think in Hong Kong, one of the sort of vibrant use cases that I think will be introduced, you know, in a couple of years in Hong Kong, is something that we explored first with the use of sort of screen scraping technology. One of the insight that we had with the market was that retirement was one of those issues in Hong Kong that, you know, it was something that people knew they should be taking action about. However, there was a big sort of underserved market there. People were not quite sure what's happening with their sort of retirement accounts. People were not quite sure whether they're on track. It's something that people would just do very passively. And we felt that there's an opportunity here for sort of financial institutions and fintechs to come in and use sort of the sort of the data around, you know, people's pension accounts and their investment accounts to help them think about how they can plan their money better for retirement. And I think that's something which we realized in the market about a year or so ago, and it's something that we have seen now, sort of, you know, with this new thing called eMPFA, which is sort of this MPF aggregation platform, which will be introduced by the government in about sort of 2 to 3 years, which would allow sort of a consumer to not just understand their pension accounts, but also allow them the capability to switch providers, etc., and hopefully for the platform to provide more value-added services on top of that. So I think that's a great example of how locally we are seeing, and some sort of application of open finance solve, I think, what is truly a real problem in the market.
I'm glad you mentioned this, because that was my one more question that I wanted to ask related to that, right? So it's like how the regulators can, which of how the regulators can help really, let's say, fostering these partnerships, right? We just said. I think this is a great example, as you say, with the EMPF, right? So what do you guys see? What's your view on that? On what could be done by the regulators to be able to support the open banking?
I think in general, sort of prior to sort of us launching in the market as well, we had an open dialogue with the regulator about sort of introducing screen scraping related solution in the market, and potentially sort of educating them about, the impact it could have and sort of what it means in terms of the reaction that we expect from not just the consumers, but also sort of different financial institutions. And I think the biggest takeaway for me from those conversations was the regulator having an open dialogue about it, and actually communicating what their biggest concerns or challenges that they face are, and us as a fintech then, getting back to them around what we think is a possible solution. So I think as a regulator, it's about being open-minded and ultimately, driving the decision for the market that they are regulating. So I think it starts off with being open-minded towards certain problems that exist.
Right. So to be more engaged with the fintechs, with the ecosystem, right, and support them. Jason and Marie, what's your view on this? I mean, you guys have not only Hong Kong view, probably. What probably regulators here in Hong Kong could learn from other regulators? Do you have any example you've seen elsewhere that you think for Hong Kong probably, take as a like a straw man, right?
Yeah, I think the sense I get is that there's, you showed the different paradigms earlier, and I think one thing that can be confusing, and confusion leads to delays, is when the stated goal or intent is one direction, but then the actual things put in place are not there to necessarily support it. So I think if a regulator is saying, we want this to happen, make it happen, then it takes a lot of work to actually provide then the infrastructure for industry to operate within. And that's I think something that we've seen work really well in Australia, for instance, is that there's a kind of a separate regulator and a separate data standards body who's not funded by the banks, but has participants from the banks as well as fintechs and other areas to actually nut out the specifics. And I think that's something where if you want fast development and standardized development, then the regulated approach works. If you leave it open to the market, what you're going to get is much more of a focus on use cases. And that's great if what you want to achieve are real use cases that work today. The one drawback of the very use case oriented market driven approach is that it's not really enabling open innovation. And it doesn't allow for scenarios where I think the minute you open something up to the world, or the world in some controlled sense,
right,
that's when you get magic innovation that you can't predict. And so I think it's a question of what do you want to achieve? And if it's really about like some short-term use cases that make concrete sense and that we can imagine today, perfect, and then market-driven can work. And even there's things I think you can do as the regulator to at least make it easier for someone like Ankit, for instance, to innovate. If it's creating a level playing field and more competition and allowing unheard of ideas to come to the fore and potentially like shock us all in a positive way, then I think creating a level playing field through regulation is the way to do that. And then taking a lot of learnings around, what worked and didn't work about the rollout of specific pieces of regulation in Europe and elsewhere.
I think just to extend on what he's saying is she brings up a good point about the independence. So that on the first thing that I was going to mention on the regulators, what they absolutely need to do to help this any kind of open banking and working in this space is they have to change their processes from working at 1 mile an hour to 100 miles an hour. And ironically, when they do work at 100 miles an hour, it still feels like 1 mile an hour to fintech companies. But the fact is, they have to create a process that is much faster and easier to work with, because fintechs, they're not like banks. They're not used to few long processes waiting 3 months to get something done. They need to be able to react quickly. And the FCA did a good job of creating a sandbox for fintech specifically in the UK that worked very well. It was still slow, but it was much faster than what you would expect it to be. And I think on the point that Marie was saying, independent governing bodies is absolutely the right way to go. They've done it in Australia with Fintech Australia, and in the UK you've got FData, and I remember FData is now global, but FData came about. The person who runs FData is a chap called Gavin Littlejohn, and Gavin and I sat down. I can't remember what it was now. I think it was 2014. And came up with FinData, because the problem that we had at the time was there was only screen scraping. And the issue we came up about was, how could we create a body that educated consumers that this was, a secure, safe way of accessing data? And how could we create a body that could educate the banks how this works? And could we get more direct relationships? And then the final point was, how do you educate the regulators? And that's how we came up with FData. And FData was always about, the members should be banks, they should be fintech companies, they should be competitors like, us all on the call today. And then they should be any kind of industry body that wants to have access to data. And that's worked very well. The likes of FData has now become global and has operations everywhere. And they work really well with the local regulator, because they can use them as a soundboard, and they're independent.
Yeah, and thank you. And actually, this takes me to the poll that we have. I think just to the audience, please, if you have not taken the time yet, we have a poll that actually touches exactly this point, but it's more about accountability, right? Actually, it's been a discussion in many of the panels, probably in the past past years, and it's like, who's really accountable for the data really of the users, right? In some, there is a lot of different views, but I think this is we'll come back to this a little bit later. As you can see now, it's regulators. Interesting, but we have only about almost 50 minutes left. But that's a very good point, right? What we see, and it's really coming to the fact this is one of the ways where the governments could support, right? Really establishing this body that will support. I've lived this in first person actually myself, where delivering project with working in partnership for years, and seeing that the challenge goes when you have to go to the due diligence of a bank, right? It means some of the banks might take such a long time, and having the right conversation, get all the different approval for different stakeholders can be really endless. Even though we see this is getting much leaner, but still it takes it is time consuming process. So when I go take a look at one of our questions, since we have about over 10 minutes left. So this one in China, let's see, this is one of the top rated one, which says in China. Lorraine, can you make it bigger? In China, a lot of these screen scrapers and PFM have been shut down by the Chinese government last year. So do you fear the impact that Chinese law, we'll have in Hong Kong, in light of the national security law? I don't know whether anybody wants to take this one. Is there any concern? You see any concern related to that?
Actually, it's very interesting. I'm actually quite surprised that we have seen screen scrapers and PFMs being shut down because of data aggregation. We actually did a legal review, recently for mainland China for use of sort of account aggregation or screen scraping, and the legal review sort of came out as, there is actually nothing illegal about it. And so I think I'd love to sort of understand a little bit more about why these have been shut down, and there could be a presumption here that it's due to sort of the technology as opposed to how these companies use the data. I think an example that I'm aware of was a company that used this data and took more data than what sort of customers had consented to, and used that for sort of getting money back from borrowers, etc.
Right.
And it's for that practice that these companies were sort of raided and shut down. So I think we probably need to sort of get some more clarity on this question.
Yeah, this is an interesting point. Like how we'll be able to in the future to actually manage that risk, right? So that they might probably start using data over the one that the users is agreed upon, right? So these are, I think it's a great point which I see many times coming across news and articles. Yeah, but thanks. Okay, that's a very good point, and I definitely see there is and Jason and anything. Yeah,
I was just going to add to that use of data. I mean, ultimately, the use of data is a completely different track from using open banking or using screen scraping, because I could upload my bank statement into any kind of service and all of that data, and you can use that data in the same ways as if I was giving you real-time access to that data via an API or screen scraping. So I think you're absolutely right. Those kind of services, I mean, whether you're getting that data via APIs or whether you're getting that data via screen scraping, neither entity in the back that's providing that service can either access that data and do anything with that data without your consent. So it's always a consent driven service. And if you think about how that service works, is ultimately I'm an end user using a third party piece of software to access my data at mybank.com. It's not SaltEdge going off and accessing your data and doing wonderful things with it that you've got no say in the matter. It's definitely a consent-driven service, regardless of the mechanism used to get that data. Open banking makes that consent much more simpler and easier, which is why we all want the banks to embrace it moving forward faster and quicker. But basically, it's always a consent-based service. We can't be accountable for those organizations that don't adhere to the proper consents that they receive on connecting data, obviously.
Thanks, Jason. I think we have time for a few more questions. Lorraine, can we pull up again I think we have already gone to the first one. Oh, banks in Hong Kong have come out to say we should not use apps that screen scraping their data. So how do banks react when trying to take to them to talk to them about open banking and APIs while being labeled a pirate? Okay, this is a strong statement, but Kid, you're probably closer to the Hong Kong, right? What's your view on these questions?
I think sort of generally speaking, I haven't really got a feeling that the startups or any company that is essentially using any kind of screen scraping related technologies are labeled anything negative. If anything, we've actually seen a lot of interest in sort of understanding our path forward from here. So what I've generally sort of seen is that I think banks obviously are doing the right thing by letting customers know to read our privacy policies, understand the technology, ensure that sort of customers know exactly what they're doing. So I think that's right from the financial institutions to do that. But in general, the perception towards the technology hasn't been sort of negative to the sense that there's no conversations going on. In fact, for many of our services, we actually work directly with banks and sort of double-digit number of banks. So if anything, I think banks are more fascinated and actually looking to learn. Like I said, I think this for us is a proof of concept for open banking and the use cases it can generate. So I think a lot of banks in Hong Kong at least are aligned to that.
And it's an interesting point, because it leads me to another question I wanted to ask you. how do you think, because I know there's a lot of innovators in the banks, and I talked to several of them across different banks, right? And sometimes the question they have, the struggle is like, how do I drive this conversation internally to the bank, right? How do I convince my senior stakeholders that open banking, is the future, and that we should open up the API, we should be open to conversations, and so on. So what have you seen in your experience that work, or what's your view?
So, I mean, what we've seen in the past, and I think what banks are starting to realize is actually, if you're somebody in the bank trying to convince your board that open banking is the way to go, what we're seeing now is that open banking is going to increase usage, sell products, create more innovation with inside the business. It's not going to lose you customers. It's the chances are, without open banking APIs and a way that third parties and customers of the bank can access their data, without those mechanisms, your longer term, you've got more chance of losing your customers as other banks start to innovate. And it's, if you just look at the, if you look at the new banks that are out there, a lot of those, when they launch, had APIs, a way to connect to your data. Their adoption rates are high. The younger generation are coming up now. They want access to their data in apps. So whether it's, you mentioned it before, tip sharing apps or paying for bills or anything like that. And if they can't access their data quickly, it's one of the reasons customers like Revolut, companies like Revolut, are so global already, because they offer that easy way of connecting your data.
Yeah, the scalability, that's that layer of scalability, so you can bring definitely more clients in, and yeah, there is a great opportunity in there. It's Marie and then Kate, you guys have anything to add from your side on that?
No, I think that's pretty comprehensive. I mean, yeah, I think as Jason said, it's about back to the zero-sum game. It's about, I think forward-looking banks see themselves increasingly as centralized providers of data or identity or interoperable infrastructure, and those conversations are easier.
What I may see sometimes is the blindness towards the opportunity that sometimes might happen in these cases. So you see just what you're going to lose, but you don't know what you're gaining, right? That kind of a
loss aversion.
Yes,
strong instinct.
Yes, fantastic. So I think we have a few more minutes left. Perhaps, Lorraine, shall we look quickly at the poll before we do? Okay, great. So interesting. So this is looks like majority of our audience has 75% that believes that the 80% now 80% thinks that actually the regulators should be accountable for the data, the user data. So and this comes back to that point that you made also, Jason, before. It's like, so having this external body that might be able to would that be how do you see that? How do you see that working? Is it something that could be a game changer, right? For open banking, having that accountability sorted out within the different regions, and finding the right model, how much that will help really the growth of open banking?
Yeah, I think, I think the actual answer for this question, and I don't know if Maria or Ankit have a different view, but, everybody who comes in contact with data has the same level of responsibility. The bank has a responsibility that they should provide you access to your data in a safe and secure way. The technology provider, like the companies you've got on this call, have a responsibility that they keep that data secure and safe when they're connecting to it and storing it. And the consumer has a responsibility not to just go off and share their data with, any app that they come across that they haven't read the terms and conditions and the consent flow properly. So, and then obviously the regulator has a responsibility that the actors in the space that are playing in that marketplace meet the various regulatory standards that they put into the industry. So I think it's probably a bit unfair to put it all onto one party. I think everybody has a fairly equal amount of responsibility when they're connecting to data.
Yeah.
Including consumers. Consumers tend to not seem to, they're probably the most responsible ones.
Thank you, guys. I think unfortunately I'm gonna stop here because we are out of time. It's almost at 7 p.m. I just want to take this minute to first of all say thank you to people that have done into this webinar. Thank you all of you for making the time and attending it. Thank you so much to the panelists tonight. Thank you. This has been a great discussion. And we look forward. Please follow us on LinkedIn. We'll come back with other webinar in the future. Stay tuned, and I wish you all a great rest of the week and a nice weekend. Thank you.
Thank you very much.
Thank you.
Thank you.
Thank you.
Bye.